still in the morning session or the last one of the morning here. Great to see everybody coming along. I mean, some amazing earlier sessions on the asset management and learn about some of these tax strategies. I struggled through learning those tax strategies on my own. It's great when you got somebody to lead the way for you. So we're going to move into as I said, the last session of the morning. It's going to be myself leading this with Schreier, and we'll be having Brad Sumrok going to be joining us here. And so thanks, Brad, for joining us this morning.
Yes, I'm happy to be here.
So I'm going to do some intros and get going on that, and then talk about kind of how investors' expectations and how they can help themselves in the marketplace right now. Quick disclaimer, this is not an education series, and we're not professionals. We're here to just share our experience and our knowledge of things as we know. So we're not making recommendations to you, just sharing the experience. So enjoy the session with us. So I wanted to talk about my meeting Brad the first time. So here's Brad and myself right on the first row of my first time meeting Brad. This was in like September of 21 at one of the rat race meetup or sessions that Brad does. And it was the first time that I started really putting on paper like my goals and stuff towards multifamily. And since then, I gotta follow up here a little bit, but since then, when I started putting intention and looking at my goals and what I wanted to accomplish and how Brad walked us through that, it really helped me get the whole mindset, the process going, and the connecting with people. It was really awesome. And you see our team here, a lot of time spending with Brad as well. He's a great support for us, great mentor for us. For me, especially, I know Schreier had some cool stories as well. I think when he first met Brad and introed into this. Schreier, you want to share about that?
Yeah, absolutely. So very similar to a story, very similar stories like you. When I was doing single family and my residential company, I wanted to grow, didn't exactly where to grow to. So when I got into the warehouse 2018, 2019, I saw one of Brad's event in Dallas, the same similar weekend events. And when I went in, I saw him speak, and I saw all the people were there, and also I met a couple of the people there as well. That was my first time I triggered, okay, there is another business segment out there that's a bigger ticket item, but you can go for it together and you can still win it. So Brad, thank you for the webinars that you put out. It's really helpful and got me so far. So Brad, thank you again. Mike, back to you.
100%.
Yeah, you're welcome. You're welcome. I'm glad to be here with you guys in your company today.
So what I wanted to share next is how that kickoff then in April of, and this comes into this some rock, some don't, I think. So since that time in 21, my journey and tying up together then with Schreier and Sanjay, I went from, a handful of single family houses then into now we're, in the process of a company, building up a company that is growing, and we're in the process, a lot of you've heard, we're merging with another company, Realty One Partners. And with that, we come into a large company that brings development, construction, and multifamily and retail operations, leasing, brokerage, and everything. So going from that to a 430 up to 500 million AUM probably by the end of this year has just been really a testament to the stuff that I've been able to get through. Not, Brad has been a great one. There's many others I've also just learning and putting out there. How do I need to educate myself about what I'm going to do and take, what are the risks that I want to take on things. So I just want to share that. And I thank you to the community and the Brad's community for this as well. And now I'm going to turn it over to Brad and his introduction. Brad, I'll let you talk about yourself a little bit, and then we'll get into the session. So thank you.
Yes, thank you, Mike and Sharir. Happy to be here. And it's really interesting. So I'll give everyone a little bit of background, and I'll just kind of jump in. And Mike, and for everybody to know, like, I put some slides together to talk about investor expectations, but a lot of what I'm going to really do is just talk to you about what's going on and what I see. And Mike, if you want to interrupt me and ask me any questions or anything that you think, you know, the audience would want to know, we could do that too. I'm over prepared, so I have, you know, tons of content and slides to share, but I really want to make sure I'm serving the audience today. So look, I got started back in 2002, and actually I got started before that. I have 2 degrees, and I worked in corporate America for 14 years before I started my real estate journey. And how I started was like so many people out there. You know, I was taught to study hard, get good grades, go to college, get a job, stay out of debt, stay out of jail, diversify my investments. If you don't have cash, you know, you shouldn't buy it. And so I did all of that. And I did that until I was about 35. And I was basically a, you know, upper middle class employee. And I was average at what I was doing. I was average in my career. I was average financially, maybe a little bit above average, but, you know, I wasn't, I definitely wasn't a millionaire, and I definitely wasn't a multimillionaire. I had no passive income. I paid my fair share of taxes like everybody else. And, you know, I got fired once. I got laid off once. I didn't come in early. I didn't stay late. I didn't work through lunch, and I took all my vacation. So I never really excelled in the corporate world. And I read the Rich Dad, Poor Dad book back in the year 2001. And that book inspired me a lot. It inspired me to be a business owner and an investor, as Kiyosaki lays out in the cash flow quadrant. And so I did, and I went and sought out education. And so instead of going back and getting a 3rd degree, which I thought about doing, thought about going to law school after an engineer and an MBA, I went and sought out specialized education, the kind that you're at here today. For example, Kiyosaki says specialized education could earn you a fortune, and formal education could get you a job. And so I read the books. I was motivated and inspired. I sought out real estate education and mentorship. And my first deal I ever bought was in 2002, and it was 32 units. And since then, I've mostly syndicated my properties, and I've done over 10,000 units. I'm currently in about 6,500, mostly as a general partner, but some deals I'm a limited partner as well. I became so passionate about education because that's how I started. I was educated by Kiyosaki's books. I was educated by going to conferences and seminars, and I had a mentor. And so I wanted to become an educator and a mentor because it changed my life. And now I've changed thousands of people's lives. And, you know, I'm often asked why I teach and don't just do deals. And I have friends of mine like Michael Becker, Charlie Young. These guys started after me, and they have more units than me. So just to be clear, I could make more money doing deals. All these folks, Michael Becker, Charlie Young, a lot of these folks started after me. They have more units than me. They probably make more money than me. But I'm passionate about education because that's how I got started. So, so that's what I do. I do deals, and I help people do deals, and that's what I'm passionate about. So I see some people posting in the chat, some of them are my students and in my mastermind. So thank you so much to everybody who's been part of our mission. And our mission is big. It's to mentor and lead and inspire over 1 million people to become financially free. And so all of you on today are part of the mission, because some of you may merely be inspired. Some of you may be motivated. Hopefully you all take action. And some of you may end up wanting to learn, more from me or even be a student. So like whatever the capacity is, the fact that you're here right now or listening to the recording, you're part of the mission. And the mission is to become financially free. And the best way I know how to do that is by doing apartments. So Mike, that's my intro. And where we want to go from here? Because like I said, I'm over prepared and have a lot of slides, but what would serve the group the best right now, do you think?
I'm gonna share here again and jump onto the next slide.
Mike, what's your screen? I want to share the other screen. Okay, here we go.
Here we go.
Okay.
So I know you have a big event coming up, so we're just sharing that here. But really, one of the things as we go through about, for expectations for LP investors, one is like, okay, we can talk about the expectations, but what is the process? Think about as I go through here. Whoops, sorry. Understanding the risks and rewards is key, right? It's not going to be for me or you or Schreier to tell someone about what their expectations should be. It's really their internal expectations to me and understanding the risk and rewards of what's coming up. What's your thoughts on, how do you help people to get through that process of how they can understand risk rewards and fit their own expectations to what the market is coming around
Yeah,
to?
this is perfect. So let me
And
give
if you want to share slides, Brad, if you want to share slides, I can stop sharing. You can share anytime. Let me know.
Yeah, let me have the ability to do that. But first, I'm just going to speak from the heart rather than just go through slides. But I got 37 slides that I prepared. But here's the thing. Let me give you guys a little history lesson. The last 10 years, we've had an economic expansion. The last 10 years, anyone who invested as apartments as a general partner or a passive investor have probably made more money than what was projected. I know that's the case with my deals and most of my students' deals. And, the fact of the matter was we had good underwriting, good skill sets. And we also had a good economy, which involves some luck. We can't control the economy. We can control our internal economy, but we can't control the external out there. Okay. So the last 10 years, which was when many people got started, we have been blessed with returns for the most part higher than what anybody ever projected. Now things are different. And the reality is, and I will share some slides here. Okay. I'll go ahead and share now. Let's see if I can get that to work here.
Okay. You should be able to.
Yeah.
There you go.
So the reality is that over time, there's always going to be expansions and there's always going to be contractions. And unlike what's shown here in the chart shows the same length of time. It's like every, there's an equal amount of time between an expansion and a contraction, but that's not true. And what's true is that the last 10 years we've had an expansion and now we have a contraction or a recession. And so like for passive investors, I think, the first thing is people need to understand that, because if we look at what's going on right now, this is from the Game of Thrones, we're kind of in like a winter season. And I've been through this before, Mike, like I've been through the great financial crisis of 2008. And I know the strategies. Like we got through our deals. Like I did not lose anybody's money. And there's a strategy for that. But, and part of the strategy is like I'm in like 27 deals right now, and only 2 are doing cash distributions. And, I was just asked the same question on a panel just an hour ago. And the reality is, like, if you're in a deal and you're receiving cash distributions right now, you almost have to scratch your head and say, how is this happening? Because, if you look at what's happened over the last couple of years, I mean, we've had rate hikes, we're in a recession, we're a divided country, we have an election year, there's a war going on the other side of the world. Like there's a lot of stuff happening on the outside that's affecting the performance of the properties. Insurance has gone up, taxes are going up. It takes property taxes 1 year to catch up with all the rent increases because taxes are done like in arrears. And so like the tax values that are coming out right now are based on the 2002 numbers. And so now we're in a position where like our costs have gone up, the rent growth is slowing down, but the taxes are going up. So, one thing investors need to know is that, like I could just say in the last 10 years, we might have projected a 2x return, doubling your money in 4 or 5 years. And we've done it in 2 or 3 years. And everybody was happy and delighted. But now things might be different. Maybe we projected an 8% cash return, but we've paused distributions. So my message to everybody is we can get through this, and I was also asked, I'm going to talk about some dirty words here. I was asked on a panel today about capital calls. And my view on that is very simple. This is a partnership. The way I structure my deals, Mike, and you guys probably do yours, we're not limiting the passive investor upside. If we project a 2x return and do a 4x return, we don't come back and say, hey guys, like we should get to keep all of the upside. Like they share in that. And so if there's a capital call or a need for extra money, and it's not caused by, operator error, i.e. like, I didn't make bad decisions. We didn't do anything stupid. We were diligent in our operations, but we just got caught up in a time where interest rates went up or taxes doubled or insurance tripled. Like my view is investors should also, if they want to share in the upside, they should participate in these capital calls. Now, if you're a general partner listening to me on this, you have to show your investors, like, what do we need the money for? How is that money going to be used? What's the light at the end of the tunnel? You got to show them a revised business plan and inspire confidence in your passive investors. So, and then as a general partner, everybody right now should be reforecasting their deals. The underwriting and when you bought the property 2 years ago does not apply today. And that's a message for general partners and passive investors. So underwriting is a projection. It's not a promise. Like sometimes I hear, I'm going to stop sharing a little bit here, but I can share again. Sometimes I hear investors say, well, Brad, you promised me this and this is what you delivered. Any general partner, we should never be promising anything. And there's a big difference between a promise and a projection. And the projection is based on the best available information we have, based on market trends, market data, sales comps, rent comps, and all that type of stuff. But, nobody projected the Fed raising interest rates 10 times or 12 times over the last 18 months. But I could tell you that's going to come to an end. And 2024 is an election year. And I highly doubt that they will continue to be raising rates under Joe Biden's watch. If Joe Biden wants to be elected, he's going to claim that he tamed inflation and lowered interest rates. So if you're waiting to get in and you wait too long, like right now, real estate's for sale. It's one of the best times to get into the market. And again, I was asked that today on a panel, like some people are waiting for a better time, and I can just tell you now's the right time. And as soon as they start lowering interest rates, all that capital on the outside is going to be pouring into deals and prices will skyrocket. So, Mike, where do we want to go from here?
So let me, or should I go ahead and share?
Yes,
If you
yes.
get anything to jump in, I'm going to go
Yeah.
back to the slide in a second. So go ahead.
Got it. So our massive philosophy is very similar to where Brad at. That is, we expect one more bump maybe, and that's it. And we are going to go through a version of 1980s, and we know Fed's going to hold it tight for a little bit. We don't expect any rate hike anymore in next year. Probably it's going to stay steady. Then the tail end of it, whoever's run for the presidency, they're going to come out either bashing it or pushing it downward, saying that look what I'm doing, right? So that's the same. And also we believe, when the market downturn happens, the stronger teams will be able to stride and get more out of it when big boys on the sideline because they have mandates and everybody else too scared. So we have roughly, like early on Q1, we thought we have roughly about 3/4 of window to buy as many as you can. Now we believe we still have about 6 months of window. What Brad was mentioning is that the moment everybody believes that we are done, we're on the low end of the market, everybody will come through with the money that we have. So still buy whatever numbers make sense. And going back to the underwriting, we believe, and coming from Shell and Exxon, ConocoPhillips, we underwrite, and our assumption is number one, we use the best information available at that point in time, because forecast is that forecast. It's a forecast best available, best quality of information at that point in time, and it changes over time. And also we call it something, it's called P50, which is 50% likelihood of happening, whatever forecast that we put out, and we try to balance that with the downside and upside. Brad is laughing. So yes, we use P50 and P10 and P90 when we underwrite, Brad.
Well, yeah, I mean, yeah, I think it's critical that, investors understand that there are market cycles. Now, there are people out there that have made bad decisions. There are people out there that, allegedly have commingled funds. There are people out there that aren't transparent. There are people out there that don't have strong teams. And the message out there is y'all need to avoid those people and vet those people. And that's why I'm passionate about education, is because, look, if I give you a projection, let's say I'm doing a deal, I'm promoting the deal, okay? I want to raise the equity for the deal. I believe it's a good deal. I'm putting money in the deal. If you want to invest in the deal, you don't want to just take the word of who's promoting it, no matter who it is. Now you do want to take their word to some extent, and hopefully you know them, like them, trust them, but you also want to understand what you're doing. Like a passive investor should be able to look at a projection and ask intelligent questions like, does this rent growth make sense? Does the reversion cap rate make sense? Do their projected expenses make sense? And how do you do that? Okay, you do that by getting educated. That's how you do it. You do that by asking questions. And you should not only ask questions about the projections, you should ask questions about the general partnership team. Who's in charge? How much money are you putting in? How much liquidity do you have? Like, there's a lot of deals right now that are short on capital. Where is that capital going to come from? The general partners could loan the money. They could do a capital call. They might have to raise outside money. They might have to get rescue capital. And by the way, if you're in deals right now as a passive investor or as a general partner, general partners all should be evaluating that. Your initial underwriting doesn't matter right now 2 years into the deal. What matters is, where are we at now? What are our rents? What's our occupancy? What's our plan? What are our capital needs? What kind of rent bumps are we able to get today from doing our value add or our upgraded units? Let's reforecast the deal. what's our current interest rate, what are our current expenses, and what are our updated projections?
So true. So I'll give
And
you
then,
some
and
data
then
points.
communicate that to your investors. You got to communicate the good, the bad, and the ugly.
You're so
And
right, Brad.
I'm gonna jump first on one thing,
Okay.
Shariah, before
Then
you
I'll
do is, the last thing Brad just said, communicate the good, the bad, the ugly. And, you know, early on, when it, you know, for me, the first start out was communication was not as great. And I've seen where, as I've improved the communication with investors, and whatever it is, the process of having that communication on a monthly basis, a quarterly webinar, whatever that is critical. That's like for everybody, because it comes into the transparency. I know I'm not trying to hide anything. This is where we are. This is what we're doing. This is what's going on. Sometimes you get in the, you know, the thought of, hey, I've got this covered. They don't need to know anything. And I've seen other companies, other, you know, groups that go along that line. Hey, we're returning you money. You should be happy. We're not gonna, you know, share with you, but you don't build up that process of, you know, of letting them know, you know, and get them ready for when things are not that great, or when things, you know, maybe need some help. So Shariah, you had something you wanted to share, and then I got a couple questions that have come up, and they tie into kind of the lead of the next pieces, getting educated as well.
Yeah.
Go ahead, Shariah. You had a share.
Yes. So back, I mean, kind of piggybacking what Mike was talking about, we grew and we saw how important is communication, good, bad, or ugly. If we are comfortable having a tougher conversation, the rest is easier. And also for us, we always say we buy assets, but in a sense, we're buying a company. If I'm running a $50 million company, I have a PR, I have a bunch of investors, and if I cannot communicate, it's an issue, right? So communication is extremely important, especially on the GP side. On the backside, going back to the get educated, I think everybody that we have met, we have worked with and working, you know, partnering with, everybody came via a platform. What happens is if you play by yourself and talk to 1,000 people, maybe a handful of them will be thinking your frequency, and maybe handful of from them will be walked the path that you're about to take. But if you get into a platform, what happens is you see another hundreds of folks thinking the same frequency, trying to do the same thing, and a good chunk of them walk the same path you walked, maybe a version of it. So what happens? Your learning curve gets short-circuited. I've been through it. Mike, you have been through it. Brad, you have been through a version of it, right? Everybody has been through it. So getting educated is very important. And from the data perspective, the majority of the deal that is falling apart that we see, it's because of the debt structure and the insurance and tax, right? So LPs, before we focused on revenue, what's my rent bump, what's my occupancy vacancy, but now it is even more important for LPs to understand what the debt structures are and how to ask those questions. So education is becoming a really good component and a huge component of investing. So we always say, get educated, at least get started, right? And then getting education is very important. So 100% aligned on that one, Brad.
Yeah. And, you know, just to add, if I could add a few things, like what else should like passive investors be doing? Well, one is I almost hate the term passive investing, because if you're watching this right now live or the recording, it's not passive, because you could be out on a Saturday morning at the pool or the lake or the beach or whatever you're doing. So the fact that you're here proves that it's not passive. Getting educated is not passive. Reading updates from the general partners is not passive. Reviewing the financial statements is not passive, right? You know, understanding, you know, the business model, you know, all of these things, when everything is going really well, it could be somewhat passive. But when things aren't going well, you want to understand. And, you know, I see some of the questions there too, but it's like, if there is a cash flow shortage, let's say that you're in a deal right now and you're getting cash distributions, like I would scratch my head and I would look at the financials and be like, how are we doing cash distributions? And I'm not saying you shouldn't be, there are deals that are justifiably distributing cash from operations. But some general partners might be gearing up to do a new deal, and they might be raising money. And so they start dripping cash out of their current deals so they could say, oh, we're doing distributions. But if you're an educated passive investor and you look at the financial statements, the income statements, the balance sheets, and you don't see a net income, you got to scratch your head and say, well, where are they getting those cash distributions from? So like, it behooves you as a passive investor to be able to read the financial reports, look at the financials. You don't need to go through every nuance, but like, you should understand the basics of like an income statement. You know, you have your income, your expenses, your debt payment, and then your net cash flow. And that should be on a financial statement. And then you have a balance sheet, and you can see like, you know, is there money in the bank account? And these are simple tips that every passive investor should be able to be aware of.
Yeah. So I'm going to tie in one of the questions. We talked about the education, and we'll come back to one of the hard questions later on a little bit of people understanding things. I'm going to throw you the softball, Brad. Here, this one is it's talking about your first deal and how you got started. And that's, you know, kind of our last part here is how you get started. So we kind of go things backwards, like not how do you get started, but start with the reverse. Like, you know, that's why we start with understanding the risk, then getting educated, and then getting started, right? So maybe education is getting started, but some people want to hear about your first deal, how you did it, what kind of a team did you have then, and what maybe, and even think about like how you would do it today if you were to do things differently.
Yeah, I mean, this is so simple. Like everyone, I just hope everybody gets what I'm about to say. It's really simple. Okay, I got started by going to a seminar and enrolling in a mentorship program. That's why I do seminars and do mentorship, because it had a big impact on my life. Now, other people might say, hey, I'm going to read a book or go to a meetup or shadow somebody or whatever. But it's like, what I tell people is you're paying one way or the other. You're either going to pay with your time or you're going to pay with your money. And so I got started by going to a seminar, paying for a mentorship program. And I saw one of the questions, like, who did you have on your team? And that. And through that mentorship program, I got access to the mentor's Rolodex, their lender, their attorney. I didn't have to go and reinvent the wheel and find a real estate attorney or find a lender. Like it was all, handed to me. And then I learned the basics. I learned how to underwrite deals. I learned how to make offers. Like I had somebody holding my hand. So that, to me, is the quickest, most time-effective way. Like, time is the most important asset. Like everybody, and again, for those who were waiting, like another question I got today on a panel was like, well, shouldn't we wait? Or things are going to get worse before they get better? I want to enjoy every day I have on this earth. Like you could wait and get hit by a bus, and then you didn't take action, you didn't enjoy, you didn't, leave a legacy for your family. So like there's not a lot of good that comes out of waiting to achieve your goals. Like if you have a goal, a cash flow goal, a tax savings goal, a net worth goal, the sooner you start, the sooner you'll get there.
It is so true, right? I mean, if you forget about the price of coming into the mentorship has so many other subtle benefits that we don't see, right? My tagline is, yes, if you flip a house, you're gonna make a mistake, $5,000 fine. If you buy a $2 million deal, you make a mistake, that's 20 grand, 30 grand out of your pocket. You're buying a $10-20 million deal, every mistake is $200, $300, $500,000 hit. And we should not go in first in trying to buy something we have not been there, done that. And all those folks who have been there, done that, they come from a mentorship program. Not all, a dominant chunk of it, they come from mentorship program. And having someone in your team who has been there, done that, and say, you know what, Shariar, you know what, Mike, stay calm. Let me show you how to do it. That is extremely important. Even for Massive, we have those mentors, right? Brad, the way I take a look at it, you have done so many deals. You know, when you take a look at a deal, you know what the good or bad looks like. You own so many assets in a different location. How easy is that for you to pull an asset? You know what? That's the building I flipped 8 years ago or 6 years ago. Here we go. I know exactly what it is. Having those relationships is extremely powerful. When we get stuck, we call Brad, we call some of the other friends that we have. Hey, I'm looking at this project at that location. What do you think? They know everything, right? So having mentors is extremely important. Even we have mentors. It doesn't matter who we are, have mentors, and make sure your mentors work at the same frequency and work in the same domain. If I want to go to real estate, I don't want to have a mentor for medical industry. What's the point? They just don't know. Yes, they know the philosophy of it, but they don't know nuts and bolts on it. So having someone on right by you who knows the nuts and bolts of it, in the thick of it, day in, day out, you want those kind of partners, and they come from mentorships.
Yeah, I mean, look, I'm not just saying like I put my money where my mouth is. I'm in a $150,000 mastermind with Tony Robbins. I go to his house. His team is now my team. I had a situation where I had a public relations issue, and Tony gave me the same company and that helped him when he had a public relations issue. You know, I just committed yesterday to invest $250,000 for a guy that develops really powerful leaders, and he's going to work with me one-on-one. And so, like, I'm not just, you know, telling everybody here, oh, get a mentor. It's like, that's been the shortcut to my success.
Awesome.
Very
Awesome.
good point. Mike, you want to answer some of
So-
the questions? You want to go over some of the open live
Yeah,
questions that we
so
have?
so this comes into a little bit of education, I think, as well. And it's understanding, like, you talked about it a little bit, and you know, of understanding the PPM and how the PPM operating agreements and how things work from a you know, an investor standpoint into a deal. And what are kind of how does it work whenever, okay, let's say we're going to have to do a capital call, and I've got some investors. I got some that have the money. I may have some investors that don't have the money, you know, and what is that process, you know, of how do they get compensated, you know, while the capital calls are going on, who gets what happens to people's percentages and things like that, you know. And you don't have to get into detail specifics, but maybe at a high level, a little bit of that process. People are curious to know more of that.
Yeah, well, like, I'm just reading the question, and some investors won't have any more liquidity to contribute. And so every company agreement, like when we buy an apartment building, we're buying a company, and there's going to be a legal document called an operating agreement or a company agreement that stipulates the rules for how the company is going to be run and how decisions are going to be made. And part of that will be, in the event of a capital call, what happens. And so what typically happens in agreements that I've done and that I've seen is that if you don't contribute, your ownership percentage will be diluted. I mean, it only makes sense, right? Like, let's say that the three of us here, Shariar and Mike and I, we all put 100,000 in a deal. And then we need to raise more money. And I put in 20,000 more, and Shariar puts in 20,000 more, but Mike says, hey, I can't put any more money. Well, our ownership has changed. Okay, so that is a consequence there. You know, the other consequence, and I'll just say it, is that, you know, and I think I may have said this before, but, like, you know, in the past 10 years, we would project certain returns, and the vast majority of them have been vastly exceeded And I don't know any general partnership groups that came back and said, hey, we did better, so we should keep all of the upside. But sometimes, you know, passive investors, they don't feel like they should share in the downside. And so, you know, to me, I think that, you know, it's fair that passive investors at least consider sharing in the downside, because we're really all in this together. Like the GPs are essentially making the decisions. And sometimes things happen that are outside of people's control. Now, if I'm a passive investor and I believe the GPs made bad decisions or dishonest, don't have a compelling business plan on how they're going to use the capital funds, I'm not going to put in more money. I'll tell you that. I won't put in a penny. But if they could show me, hey, here's what we need the money for, here's how we're going to use it, and they convince me that they're good stewards of the property, I am going to put the money in. Because just like any other business, sometimes a business needs extra capital. And if you're a general partner out there, I just have a message for you. Doing a capital call is not the kiss of death. Let me tell you what the kiss of death is. It's losing your property and losing all your investors' money.
Amen to that, right? It is. So capital call to me, how should I say? I've been through 3 down cycles from the oil and gas. Took the, at least, you know, I was in leadership team twice to go through it. It happens. When you make 20, 30, 40 decisions, when you buy a lot, sometimes it happens. But the team, stronger team will survive. I'll leave you with that. If you study strategies and things like that, look at Chesapeake, always highly levered, always fights through on the downtime. Even though, you know, they're highly levered, they make it through. So you really want to bet on the team and the property together. Back to Brad's, right? We buy risks. Every single thing that we do, we buy risks. Our job as a sponsor team to mitigate the risk as much as we can. That's what we earn the sweat equity. And that's what we believe our skill set gave us the capability of managing risk compared to the others. And, you know, and from that, 2 things will happen. Sometime we, sponsor, will make a mistake, and sometime market will turn faster than sponsors can catch up. And when the market turns, a strong sponsor team will fight it through. And what Brad was talking about, Brad, I agree with you. You should support the stronger teams and allow time, allow breathing room to catch up to the market, right? Ultimately, we're riding the market all the way. Very
well,
good.
Guys, I know are we tight on time?
All right, we
Yes.
got about 15 or 10, 15 minutes. We can go. I think.
Okay, well, but yeah, before we end, I want to take some more questions, but can you guys put up the slide about the event? Because there's some
Yeah,
special
I was
things
going back to that right now.
Yeah, I want to let people know about it, because look, I'm passionate about education, and this
It'll take
event,
me a second.
there's going to be more than 500 people there in person in Dallas. And I'm bringing in some good speakers, like at my expense, so that you all could benefit from it. So Kiyosaki is going to be there in person. And I just want you all to know he's going to be there on day 1, Friday. So a lot of people are like, oh, I'm not going to come back to, I'll come on Saturday. But like Kiyosaki is going to be there day 1. Tom Wheelwright's going to be there. He's going to talk about tax savings. Nick Santanastasso is only 27. He was born with no legs and 1 arm. And he has overcome adversity his whole life. And now at 27, he's a multimillionaire and he's a keynote speaker. And right now, when things are uncertain and, you know, I hear it's harder than ever to find deals. It's harder than ever to raise capital. Or a lot of these are just beliefs and mindset things. And if your mind tells you you can't, then you can't. And, you know, imagine having 2 legs and 2 arms. And there's a guy that has no legs and 1 arm, and he is outperforming you. Like, how is he doing that? You know, and he's going to talk about that. So this event is really going to equip you to get the tools that you need to become a successful investor. And that's why I'm passionate about the event. So I encourage everybody that's not already committed to going to make a decision and go. And this is you know, people always ask me, hey, how did you get started? And I'm like, I went to an event. You know, somebody asked me today I'm at a live event, by the way, and I'm here doing this virtual, but they asked me about the mentorship program I have. And I said, come to my event first, vet me out, spend 3 days with me and decide if I'm the guy that you want to work with for the next year or not. Like, you know, invest a weekend before you invest a year. It only makes sense. That's what I do. The guy that I just invested $250,000 with, I went to his 3-day event first. And then I decided, you know, before I joined Tony Robbins' $150,000 mastermind, I went to his 3-day UPW for $800. And then I signed up for his, you know, call it what you want, a high ticket program or whatever you want to call it. But, and so that's why I'm passionate about doing these 3-day events, because it gives people a lot of content and it gives them a lot of context, and it lets people, you know, vet, you know, who I am and what I could do for them. And I know who I am and I know what I could do for you, but you don't. So come to the event. You're going to walk away with tons of content. And then maybe you'll want to keep working with me like the guys here at Massive. I mean, Mike, I'm looking at your team, like half of your team came from my program.
They did, Brad, and
They did,
that's
Brad?
what we keep talking to you about. It's a great piece, and that's why we will be there as well. And you know, a lot of our team has you know, come through these other, you know, ways of learning, right? And one of the things we want is people to have. So what happens to my thought process when we're looking for people is, if they've bought into a program, they're doing that, they already changed their mindset, their perspective has changed. They're going down a path that we want to be along, that we see them coming along the path that we want to be. And by investing that in themselves, we already see where that's going. So we're
Yeah.
excited having them being part of our team and process as we grow.
And hey, look, I see some questions here and I really want to answer them. And people think I would shy away from this, but I'm not. Like, people are asking about Apple's Way.
Yeah.
And here's the deal. I just want everybody to know this. Yes, the guy who ran Apple's Way was one of my students. So just to get that out of the way. And I am not ashamed to say that, because look, if you go to Harvard and then if you make bad decisions or commit fraud or go to jail, did Harvard teach you that? I doubt it. Is Harvard responsible for that? I doubt it. So Jay was a student. He had initial success. And then he like went off in his own direction, and he got, this is my opinion, because I am not his partner. I was his mentor. And as he got more experience, he stopped coming to our program. He stopped getting advice from us. And he started doing bigger and bigger deals and started raising more and more money on social media. And he probably got ahead of himself and lost his deals. And from what I heard, because I wasn't involved in these deals, what I heard is he had a very small team. His team was basically, you know, non-existent, or he had like one person that was in the Philippines or something, like a VA, and he was taking on all this responsibility, and he didn't do a good job. And I heard he made bad decisions, and I also heard worse, you know, and all these things are alleged. So I don't want to share what I heard, but I heard he did bad things and wasn't honest and stuff like that. But, you know, some people have tried to tie me to that. And I'm like, hey, if you want to tie me to that, go ahead. But it's like, I've helped like hundreds and hundreds of people make millions of dollars, you know, and the Wall Street Journal didn't talk about that. So don't believe everything you read.
Let me add a little bit, right? So if you guys know a company called McKinsey consulting firm, if you don't know, take a look at it. Lack of better words, if you think about a shadow government running the world, that's McKinsey. They are the true consulting firm that go when the president want to run for presidency, they call them. When a company's like Fortune 5 needs help, they call them. That's McKinsey, what they do, bread and butter, love it or hate it. On the flip side, some of the most expensive financial crime were done by the McKinsey, ex-McKinsey employees. Does it mean that McKinsey is bad? Answer is no. They have a thought process, they have a teaching, they have a framework. When the bad apple happens, it happens, right? I came from I mean, what Brad was talking about, half of us came from the Brad Sumrok platform. And that is one of the premium platforms when you go in to get out. And we are playing together. So yes, mentorship platform is different than that. That's my deal. And kind of be objective about it. Don't be emotional about it. And it's a news, right? News, the definition of news doesn't happen all the time. And part of the news is I got to make it big, right? I have to go after some hypothesis. And that's what it is. I met Jay personally when he was getting started. Yes, I saw his success early on. And then he reached out to me personally to do deals. I called some of the lending partners that I do know, and they gave me what they gave me. And based on that, I did not invest, right? So you got to do your due diligence. You got to find out who does what and how, what the investment hypothesis is. And I always say, look, buying assets is like buying companies. Once you hit a certain amount of threshold, you got to look at the back office. Gone in those stage, you got a W-2, you're a physician, I'm just saying example, I'm Indian, I got a lot of doctors in my family, and you're working 60 hours, all of a sudden you want to be an asset manager of $100 million asset. We got 24 hours, right? So you have to think it through all that thing. And Apple Sway is an example. I would say it's a good case study of what not to do and how not to associate where they come from, right?
Yeah, I mean, look, and anybody that tries, like, the Wall Street Journal was, look, the reason I'm in the Wall Street Journal, by the way, is that number one, Jay was my student. Then number two, they also recognize that I'm at the top of the game in the syndication education business. And, you know, they were going to publish a lot of untrue things. And when I mentioned Tony Robbins' PR company, like I worked really hard to educate them and set the record straight. But at the end of the day, their job is to get clicks and to sell newspapers.
Yeah. Hey, Brad, a couple things on AIM NotCon. There's some general questions and others you may share or have the info. If you want to kind of share people about, do the virtual tickets get copies of the recordings? Who gets that? Maybe, I don't know if you know the details.
Yeah, and honestly, I don't even know. I used to know all of that.
What kind of levels you guys got and stuff like that?
Yeah, so
I
like, yeah, could I share my screen?
Yeah.
Yes.
Yeah.
Yeah, let me share a screen here.
There you go. I was going to the web. It's got a lot of content just on the site to sign up.
Yeah, let me just share this though, because I just want to show people what we have here. So
so people can know what to expect as well, and that's great.
Yeah, so these pricings, by the way, might be out of date, so don't quote me on them. This was from an old presentation I cut and pasted. But we have, what I want people to know is we have 3 ticket levels. 2 are in person and 1 is virtual. So the general admission, by the way, I think this one is wrong. I think it's $399. This was from, a month or 2 ago when the prices were less. And so anyone that buys a ticket, you not only get the ticket, but you get all these other value add bonuses like my home study course and a self-assessment. And we're doing some pre-event and post-event planning sessions and stuff like that. The platinum ticket, we get more time together. We'll have lunches together and I'll bring in some of the speakers. And then Robert Kiyosaki is going to do a special session just for the platinum people, in addition to the main stage. And then the virtual, you could watch it from home. I don't think we're offering recordings to anybody because it takes anyone that's ever hosted an event, it takes a lot of editing and things like that to like put together a quality recording. So I don't believe the recordings are available for any of the ticket holders, but I could check on that because I mean, I used to know all this stuff, guys, but now that I have a team, like I get to come in and teach and mentor, but I have no freaking idea what if the recording.
And we're gonna back you up, Brad. So that price went up. Brad is right. That price went up, but Brad gave us a little bit more thank you. I mean, kind of Shariah, thank you, and Mike, thank you. So we have a link posted out. You'll get the special pricing if you follow our link. But yes, price went up.
That's right.
So Brad, you're fine. We got you.
You guys are massive. Use their QR code.
Yeah. So that's good. We're looking forward to it. We're gonna be there. Our team is gonna be there. And we work with a lot of folks from Brad's event. I mean, the Brad platform. We like it. We like the philosophy. And guys, I mean, I don't know how to say it. Me personally, I held off not joining a mentorship program for the longest. And then when you went in, Mike was talking about you started the path, you leaning into the journey where you want to go, and you hang out with everybody walking the same path. And that is so critical if you really want to be in there, right?
Hey, guys, I want to pull back the curtain a little bit. So just so everyone knows, and I love to be totally transparent. So I'm at a live event and I was on the stage, and then I also had this event. So I arranged to be in a private conference room, and they have this really nice conference table that I was going to do this at, but there's no plug at the conference table. So I'm actually sitting on the floor, and this is plugged in. And this is how I've been doing this event. But I just want to tell you, hey, you do whatever it takes, man. When you have a commitment, you show up, you be on time every time, and you do whatever it takes. And so I wanted to show this to you at the end, not in the beginning. But this is how I roll. Like when I commit, Mike was like, hey, thanks for being here on time. Thanks for being early. I'm ready. I had 37 slides. I prefer to just talk to everybody, but like I'm over prepared. And it'll be the same experience for people that come to my event or that work with me and my team in a mentorship or a mastermind. And I see some people on here that are in our programs, and I love everybody that is here today, including you two that are putting on this event, and everybody at Massive Capital.
Thank you.
Guys, I
And
like to say, whenever Brad comes into Houston, me and Mike, we show up, and he has a busy schedule, but every time we reached out, he was able to give us the time to hang out, talk as a friend, talk as a business owner, talk as a mentor, right? So Brad, thank you for everything that you do for everybody.
100%. I
Appreciate it.
Gonna plug in the last piece
Yeah.
for me is looking forward to doing some deals with Brad together now as well as we go forward. So that's our next journey together. I think we've been in the mentorship, we've done some things, and looking forward to doing something more together with you as well, Brad.
All right. Well, hey, I'm glad that everybody that came on. Are you guys recording this and sending it out to more people? So, I mean, look, if I had to leave everybody with a closing statement, it would be, you got to just get started. The sooner you get started, the sooner you hit your goals. And the best way to get started is investing in some of your education. And so, our event in Dallas is 13 days away, August 25th, and Kiyosaki will be there on that day.
Cool. Thank you, Brad.
Awesome.
Really appreciate your time. I know you got a long day today with Quest event. Appreciate it that you took your time.
This is
and
probably
carved
your
out
most
and joined us.
relaxing time of the.
Well,
That's good.
my favorite time is coming up. I think it's lunch.
All right. All right.
Perfect.
Thanks, Brad. Thank you.
Thank you very
so much.
much.
And,
It was a
All
great
right, see you later.
session.
All right.
Great feedback
All
from
right.
everybody. Thanks a lot.
Thanks.
Okay. Bye-bye. See you guys.
Bye-bye.